100 trillion confirmed and 1 quadrillion coming next. We're talking Bitcoin, we're talking XRP. A couple of our other favorite commodities like gold and silver are pumping as well. Full update for you guys coming in here today. Hope you guys have been having a blessed weekend. Let's get right on into it with the charts. Starting off here, we see that Bitcoin did rally today. Incredible rallies based off of fake news. Spot ETF approval that did not happen, was completely a fake article that led us up to about the 30,000 point here. First rally to start off the week. We did it as well on Friday. And then here again, yesterday, we get the pump back up to about 30,300. So we're going to be watching that one closely. Our XRP back up to 53 cents off of the news that the SEC is going to surrender the case against Brad and Chris. So the SEC surrendering, taking their third loss. And now we wait for the XRP lawsuit to settle up. DXY cooling back off here a little bit after approaching 107 earlier this month. Kind of cooling off, and we'll be watching that one. For the 2-year treasury, we went back above 5.25% earlier this week. Kind of cooling back off here into the weekend. And we'll be watching this one closely because this is really jacking up all the markets. 10-year back up to 5% this week as well. Now, the commodities, oil included, pumping hard, back up to above $93 per barrel for the UK Brent oil. This is the worldwide benchmark. Also seeing that our favorite commodities, silver and gold, pumping as well. We were down to $20 spot price on our silver earlier this month, and you guys saw what I was doing. I saw these big red candles come in, and I hit up my dealer, and I said, thank you very much, and we swooped up some more silver this month. And now here we are back pumping above $23 per ounce. Gold also pumping hard this week. Love to see it. Back above 2,000. And right now we're seeing that gold is trading at a $100 premium in China at the Shanghai Futures Exchange. So while we're at $2,000 an ounce, they're trading at $2,100 an ounce, and that's just spot, not including your premium on top of that as well. We saw stocks like Nvidia really fall off this week, down about 7-8% on the day that Biden banned the chip sales to China, been moving down ever since, and Nvidia is basically back into correction territory, retracing back nearly a full 18% off the high earlier this year in August. And the other stocks like the S&P down this week as well. So the stock market falling off, but Bitcoin, crypto, and our commodities pumping. Love to see it. Now, what I don't love to see is the stories like this one here that we're going to get started with. We have auditors telling Congress that as much as $2.5 trillion of the $5 trillion the U.S. spent on the relief for the simulation events of 2020 went to a country that I don't dare name on this airwave here today, and its allies through fraud. Now, we knew that the fraud was rampant. I didn't realize how much this country had taken advantage of us as well on this point, but it looks like they worked their way in here again. That's enough to fund the entire military for 8 years of this country. Keep that in mind when you hear how great our response was. Absolute joke. And this is what brings us to our situation here today. Now, we get all that. They take us to town for the tune of $2.5 trillion of fraud. And then on the back end here, they continue to dump U.S. treasuries by the amount of tens of billions per month. In August, this country unloaded another $16.4 billion of U.S. treasuries. Since their peak roughly a decade ago, this country has unloaded nearly $500 billion of U.S. treasuries, so nearly $500 billion. How's this program working out for the United States of America? They take us to town for the tune of $2.5 trillion of fraud, and then they dump $500 billion of our treasuries on us. All as the Fed raises rates and rug pulls the United States Main Street economy, and U.S. deficit spending is now above World War II levels. The flight away from U.S. treasuries is historic, and that country is not the only one that's doing it. The countries around the world are doing it. And Peter Schiff bringing the point home here, The primary use case for US dollars has been to buy treasuries. But since the biggest buyers are now sellers, the national debt and federal budget deficits are soaring. Demand for dollars should collapse as well. Once the dollar starts falling, treasury yields will rise faster. And that was the two charts that I just showed you guys, the 2-year 5.25, the 10-year back up to 5%. And that yield continues to grow because nobody wants to do a deal with the US government unless you're going to give us 5% on our money. And this is why we have the yield curve inversion, is because folks don't believe in doing a 10-year treasury, a 30-year treasury, a loan to the US government for 10 and 30 years. Nobody wants that. So that's why everybody's piling into the short-term T-bills. And you even have shorter time frame ones. The 2-year is one of the benchmarks, but we have folks that are doing short-term T-bills for up to 3 months, 6 months, all sorts of deals like that too. So watching this closely, this is really hilarious to see as we see. This was the front page of Market Watch today. I went to go see what the news was, and this was the front page of Market Watch. Retirement Weekly. They're getting so desperate. Don't give up on the 60-40 portfolio now. It has been a good insurance policy in an unpredictable stock market. Now, for those of you who don't know, this is the traditional portfolio, the default allocation of many retirees and near retirees portfolios, in which 60% is invested in the stock market and 40% in bonds. This portfolio was given up for dead last year after it suffered one of its worst calendar year losses in U.S. history. It was the worst one ever, by the way, for bonds, and it was the third worst year ever for the 60-40 portfolio. Okay. But what you have to see here, this year's 3.8 annualized year-to-date gain is a lot closer to that average than the last year's 23.5% loss. So this year you've gained 3.8%, which, wait, what is the CPI at right now? Oh yeah, that's right, 3.7. So if our inflation rate's running at 3.7 and you've gained 3.8, how much have you actually made? In real terms, 0.1%. You haven't made a thing. You know what I'm saying? And if you held this last year, you lost 23.5%. Okay? And so this is one of the worst years ever that we have seen for this. Okay? And we're going to have to continue to watch this one. I thought there was one more point that I wanted to make. But with interest rates now at 16-year highs, the bond portion of the 64-40 portfolio represents significant potential cushion to equity losses. No, it doesn't. It just had its worst year ever. So that doesn't give you cushion towards equity losses. And think about this. The equities have just started to roll over. Now, this is the Wall Street narrative. This is them trying to save their own backs, because where's the money flowing out of? It's flowing out of these money managers' hands because folks are pulling out of their 401k. You guys are going to our affiliate link down below, and you're rolling over a portion of your 401k retirement account to precious metals. And then now we're getting other assets now available for 401k retirement accounts through other companies like iTrust Capital and the likes that are allowing you to invest in crypto with your 401k. And so folks are pulling out of their 401k, and at the bare minimum, they're just pulling out, moving to money market funds, which takes away from the 60-40 portfolio. And the money managers don't like that because then they're not making their money off of you. And then all the alternatives are now presenting themselves. So folks are moving to precious metals. Folks are moving to crypto. Folks are looking at private equity, which is what I'm looking at right now. How do I get in on these companies before they go public? And then the Wall Street shills get to shill them to everybody. That's where the real money's made. Now, as I titled this episode, 100 trillion confirmed and 1 quadrillion coming next. What are we talking about? We are talking about this article right here. We see a huge milestone achievement right here with the Bitcoin cumulative transfer volume exceeding 100 trillion. This is a very big deal, folks. You guys know me. I don't own any Bitcoin, don't really care for Bitcoin, but I will give respect where respect is due. Bitcoin's cumulative transfer volume, CTV, exceeded 100 trillion in the recent weeks, coming in at 105 trillion, at present. And this is according to Glassnode data. Now, this is just one benchmark really to kind of measure the adoption. And the big reason why it's achieved this much is because Bitcoin went to 69,000 without really any utility other than even as slow, as clunky, and as expensive as it is, they still managed to move 100 trillion of value on Bitcoin so far. I respect it. Okay. I don't own Bitcoin, don't care for it, but respect, right? And the real reason why they were able to do this is because the payments aren't fast, cheap. They're very expensive and they're not fast, but Bitcoin allowed folks to move large sums of money in a decentralized way. And that alone got it to this benchmark, right? It's sitting at what's the overall market cap of Bitcoin right now, right? It's less than $1 trillion. It got up to about $1 trillion total. Total market cap is 585 billion, right? But it got up to about $1 trillion of market cap. That's good. That's cute. Relatively small. But surpassing 100 trillion in settlement so far is a major deal. Definitely something to appreciate. And what we see right here, folks, is if you take a look, I tried to research to see if they had the numbers for XRP, and I couldn't find it. But they say Ethereum and Litecoin's CTVs amount to 6.1 trillion for Ethereum and 3.7 trillion for Litecoin. So pretty impressive in and of itself that Ethereum and Litecoin have already done 6 trillion and 3 trillion respectively. Both smaller than Bitcoin, but altogether, right, we're over, that's about, 10 trillion, plus we have the 105 trillion. So that's about 115 trillion of value moved between just Bitcoin, Ethereum, and Litecoin. I'm sure we have at least, a couple trillion in XRP as well, too. Now, where this gets exciting is with regulations, with clarity, with this SEC lawsuit behind us, where are folks going to move their money going forward? As far as a store of value, as far as a means of payments and moving value, I think that we are very, clear on what the future is. Now, this only got reaffirmed by today's news coming out that we have a major backdoor into the Bitcoin Lightning Network. So Bitcoin was able to do 100 trillion without the Bitcoin Lightning Network. I mean, that's only been around for a couple years, right? But sure enough, we find a backdoor flaw into the Bitcoin Lightning Network being reported here today. One of the top Bitcoin developers recently discovered a massive security risk in the Lightning Network, which triggered him to announce his departure from the project completely. He claims there's intentional backdoors in the code that allow attackers to easily get full control of the network. Let's not forget that the main backers of the Lightning Network are Tether, Bitfinex, and Blockstream. Oh, gee, what could go wrong? We haven't been talking about those projects for years, right? All ran by fraudsters, so who is surprised? Oh, and of course, the maximalist and corrupt mainstream crypto news channels will be dead silent about this, and they always are. Now, Wheezy, one of our community sleuths who's been over the target since the very beginning, intentional backdoors discovered into the Bitcoin Lightning Network, the creator of the original white paper for the Lightning Network is none other than Joseph Poon, said to be part of the shadow government controlling Vitalik, according to Laura Shin. And remember, we now call her Laura the Shiller Shin, and that's our new name after we have Steven Narioff, the Ethereum whistleblower, sounding the alarm on the corruption and the cover-up from Laura the Shiller Shin, Vitalik, and the whole gang. And Wheezy says, it's funny that these backdoors were discovered because Vitalik Buterin admitted to layer 2s on Ethereum having backdoors as well. It's all backdoors. They're all doing backdoors. They're all doing all sorts of activity that I prefer not to comment on. These guys are a bunch of weirdos. And the program doesn't work out. It's a complete failure. And even being a complete failure, Bitcoin and Ethereum has managed to move 105 trillion respectively for Bitcoin and 6.1 trillion for Ethereum and 3.7 trillion on Litecoin. Now, just wait, folks, because it's going to move to XRP, and it's going to move to XRP in a massive way. Quick update from MetaMan today on the AMMs. David Schwartz says, coordinating the activation of amendments. If the trusted validators get what they want, which is the XLS 30D security audits and testing reports, this will assure them that the security is up to par to the highest standards. Therefore, with this demand being met, the 35 trusted validators with amendment voting power should have no excuse of holding the AMM or the progress of the XRPL back, 35 validators per XRP scan. Yeah, so we have 35 on the UNL list. We need about 28, 29 to reach that 80% consensus and to amend the XRP ledger with the AMM functions. And when we get this is the final ingredient where the best liquidity in the world gets built out on the XRPL, right? Because, we've already done over 100 trillion in value moved without, an AMM on Bitcoin. You have an AMM built into many layer 2s on Ethereum, but what makes the XRPL AMM so great is it's the layer 1. And this is going to build out some of the best liquidity pools we've seen built out in DLT ecosystems yet. Okay. And this is why I say 100 trillion has been confirmed, but we have over 1 quadrillion that is going to be coming next. And that is reiterated in this point right here. I shared this tweet out yesterday. I didn't think that it was going to go so viral. I said basically everyone is going to hit the exits between $3 and $10 for XRP. And maybe I can talk about that, kind of deeper in a separate video. You guys who have been following me kind of understand why I am saying that. So many influencers, so many people talking about, their exit strategies at $3 to $10. All the fudsters and the haters want to drop their bags at $3 to $10. And there's going to be many people that are forced to sell at $3 to $10 because it's so tight out there. But what I'm so sad about that, what makes me so sad saying this is that many folks don't understand that $3 to $10 is nothing compared to what we have coming into this ecosystem. Take a look at this one. Ali Yvonne posted this under my comment, and she says, if you know, you know. And this is XRP versus global transfer markets. This is of February 2018. So the market cap of XRP, about 30 billion. Funny enough, that's where we're still at here in 2023. What's the market cap? 27 billion, right? Compared to the market cap in 2018, 30 billion. But you have Western Union, which does about 80 billion per year. Global non-cash transactions equaling 577 billion per year. Swift doing 5 trillion per day. 5 trillion per day, okay? And you have 27 trillion locked in Nostro Vostro accounts. Now, you also have a global transfer market, which equals about 2.7 trillion. And that equals Swift, Fedwire, chips, Western Union, MoneyGram, transfer wires, payments, etc. So you have about 2.7 quadrillion, I should say. Let me correct myself, right? We're not talking about trillions with a T. We're talking about quadrillions with a Q. Absolutely love it, okay? And then when we move on over to tokenized assets, this is separate from payments. This is the global transfer markets. And as we just reported, Bitcoin has already done 105 trillion, Ethereum 6 trillion, Litecoin 3 trillion. I don't know, I don't have the current numbers on how much XRP has done so far. But in a further update, I will let you guys know. But when it comes to tokenizing all of the money, you got this classic chart here. We have derivatives over 1 quadrillion, commodities 300 trillion, corporate bonds 116 trillion, government bonds 7 trillion, and we have banknotes at what is that? I can't even read that. It gets too small. But you're talking about trillions, okay? And they put these prices of XRP on the side here, 11,000 per XRP. Okay. And, that's running with assumptions that we get all of this money coming in. The case that I've been saying the whole time is we don't need to get all the money. That's fine. If people still want to settle value on Bitcoin, people still want to use these old, systems, they're going to. I already know that. The CBDC systems are getting rolled out. You already have Cash App, Venmo, PayPal. There's all sorts of ways to move money. But on the back end, when it comes to wholesale settlements, wholesale liquidity, and when it comes to tokenizing assets on a ledger that you can trust, right? And when it comes to building out liquidity pools on a ledger that you can trust, I think the XRP is going to be the one to rule them all. That's simply all I'm saying. Bitcoin can get a piece of the action. Ethereum, if it sticks around, and the SEC never actually goes after that project, and they're left untouched. That's fine. they can have a piece of the action. I think the XRP, though, is about to eat up so much of the liquidity that is coming into the DLT space as a store of value. And then they're going to eat up so much of the liquidity that's going to be settling on DLT as a transfer of value as well. So you have a store of value, you have a transfer of value. Bitcoin is a store of value. It also is a way to transfer value that sucks. It's a terrible way to transfer value. I mean, relatively speaking, it still works for the most part. It's still expensive, still a little clunky, still takes a lot of time. And so why would you use it when you have the alternatives like XRP and others where you get 3 to 5 seconds instant liquidity? And then with the AMM liquidity pools, I think this will actually help source the best liquidity in the world because you'll have instant settlement 3 to 5 seconds between these currency pairs. And that's where the arbitrage and the margin comes in, and that gets found, and that just gets tighter and tighter. And so that spread thins out, and that provides the best liquidity when you're going to transfer from XRP to Bitcoin, from XRP to USDT, from XRP to USDC. And, you know, when will we achieve over a quadrillion in settlement value? I think that we could see that easily done over the next decade, right? This is exponentially growing. We just covered how, Brad Garlinghouse himself is saying that we get 10 trillion of digital assets custodied by 2030. And I think that we see over 100 trillion confirmed here today. That's fantastic. I think we see over 1 quadrillion in settlement over the next decade. That's pretty exciting when you consider in the middle of a bear market recession, we're looking for something to grasp onto. Where's the hopium at? Well, here's a little something today for you to remind you just how much money is going to be flowing into this space as a store of value. Tokenized assets like derivatives and bonds, but then how much is going to be flowing in on a daily basis in settlements. I don't think that we're going to be at a 50-cent XRP price forever. So maybe take advantage of it while it lasts. If you guys are looking to get in touch, just head on over to my website, ZachRector.com. We got your favorite exchanges, wallets, precious metals. We can get it all done over there. That's where you get in touch with me. And if you appreciate our content, let's make sure that we smash it on the way out. And if you can do me a favor, let's spread this message out far and wide. Let's get other folks, family, and those that we love tapped into this message. I appreciate all of you guys so much. Have a blessed Sunday.